Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. Thursday morning, lots happened overnight and lots ahead. And we will track all of that for you. I'm Prashant. With me, my colleagues, Surabhi and Nigel. Guys, good morning.
Hi, morning, folks. Morning, Prashant. Morning, Nigel. I guess the big global event is out of the way. Those NVIDIA numbers are done. They're good. Their guidance is good. And the AI trade is back. We've actually got the Asian markets roaring far more than what we saw on Wall Street.
Yeah.
What does that mean for us? Now, that is the question. Again, at 26,100.
We are going to be at all-time highs in November itself. 1% away, I think.
In November, wow.
I mean, it's just a few sessions away. We have expiry as well that plays out. And actually, the feeling you got yesterday looking at the screen itself was good because we ended virtually at the high point of the day. So I'm feeling good. And I think getting into this festive season, Indian markets will participate.
Yeah. All-time highs, but without too much enthusiasm.
Yeah.
Right?
That's the problem. Portfolios are not feeling like that.
IT was the big star,
Yes.
3%,
Yes,
and no real discernible reason except that nobody has it in their portfolios. Earlier it was Reliance. So, I mean, the index, and these are all heavyweights and important for the index to do well. Maybe, the thing to focus on, perhaps we say, well, focus on stocks and not the index. Maybe the thing to focus on is the index because the index is kind of being held up. Okay, well, let's just quickly run you through what you need to know as we begin this session. U.S. equities rose. S&P was up 0.4, NASDAQ was up about 0.6%, NVIDIA was up 3% going into results, and of course it posted results after close. Basically, it posted another set of beat and raise, earnings, a set of earnings. Basically, they beat what was the consensus, and then they raised their expectations for the Jan to March quarter. After hours, the NVIDIA stock is up 5%. By the way, Jensen Huang essentially has said in the conference call which happened, and the call essentially is, and he addressed a whole bunch of things, nothing on China, but everything else he addressed. But the critical thing he said is that as far as the Blackwell chips are concerned, demand for Blackwell chips, the phrase he uses off the charts, it's kind of sold out. So this is, and I think the market's, of course, taking heart from it. Now, NVIDIA, we'll talk more about this a little later. Google parent Alphabet was up 3.5%, and, we're close to a new high on that one. Oil prices, meaningful move, and that's the reason why I'm pointing to it, 2% lower, $63.5. There was this headline in the Financial Times that, US and Russia are working on a new plan for peace in Ukraine. Dollar index went up. The other one was dollar, which has been absolutely muted, right? But the dollar index went up 0.5%, and we are above that 100 handle. So did something happen for the dollar to move? And we'll sort of discuss this with our guests as well. But, we are back above the psychological 100 handle on the dollar index. All eyes on Thursday for the delayed September NFP. We got confirmation that the October jobs report in the US will not be released. It will be most likely bunched up with the November number. But September data we will get, later tonight out of the US. And I think markets will watch this closely. IT stocks did well yesterday, just to kind of sort of come to our markets. So index was up 3%. And as I said, maybe under ownership, perhaps the biggest factor. Otherwise, not very much out there, which kind of explains this kind of a move. Stocks were up between 3, 4, 5%. The other indices, the PSU Bank Index continues to do very well. And the capital market space also did well. Those are the three, indices, IT, capital markets, and PSU banks. So this is the setup then in terms of levels for the Nifty. 26,100, which is 50, 60 points away as far as the upside is concerned, and that's been the upper end of the range. Support, which has moved higher and higher. Basically the 20 days, being dragged higher, and that is 25,820. For the Nifty Bank, support is the 20-day, which has again been dragged up. 58,200, or you could use hourly averages, but because the 20-day now is almost 1,000 points away for the Nifty Bank from where it closed yesterday. And of course, it's still in that rising channel, and the upper end of that channel is 60,000. 650. It's a level we've put out over the last couple of days as well. So that's the setup as we come back into this Thursday morning session. GIFT Nifty gives you a quick sense of how we are starting. 60 points on top of the 140-odd points yesterday. So it's going to be a decent start. Nigel has walked across with the F&O stats and positioning. Nigel, over to you.
Well, NVIDIA's numbers as well as the way ahead indicate that things will look up for the company. Will this rekindle the AI rally? Well, that's what we saw in after market hours, in terms of the US market. All those futures stocks, they were higher. But will it spook the IT stocks? Because yesterday, that one went up by close to 3%. Remember, they have been missing in action from the AI trade. However, I think that under ownership, as well as there was some delivery-based buying. So this as well could continue to trend along, even though NVIDIA has given a good set of numbers and the AI trade could be rekindled. But this one appears, the markets appear that they're looking ahead with regard to the IT stocks. So that's going to be an index that's going to be on our radar. Yesterday, if you look at the FI data, on all fronts, actually, it was positive. They bought in the cash market, both the FIs and the DIs on the same side, which is good. Institutions net buying. If in the futures market, if you look at the index futures, well, out there, in fact, you did have on Nifty futures, first of all, there was some kind of covering that we saw. While on the Nifty bank, there were signs of long build-up out there, and that's the one that will have to lead us ahead. But getting back to the FI data point, well, the FIs on index futures, well, they covered some mild shorts out there. The short position continues at around 88%. What about on stock futures? Well, out there, in fact, it was quite interesting because they added more longs than short positioning. And on the option side, they wrote more puts than calls. So put everything together, the cash market buying as well as the F&O data points coming from the FIs, it appears this market is looking good for more. Moving to, the PCR has moved to around 1.29 odd. Remember, we have the monthly expiry that will play out in the next 4 trading sessions or thereabouts. And the reason that the PCR has moved up is because the put writers, they feel that they're in the game and they believe that now, in fact, the fight back is on. So the 25,900 put, solid open interest build up. Premium out there is at around 80 rupees. While on the upside, this 26,050 call had a good amount of open interest build up. And normally when you see premium at 100, 150, 200 rupees, you sense that there is writing being seen at that particular strike as well. So punching in these levels, 25,900 put, 80 rupees premium, you just deduct that, you get around 25,820. And that's spot on where the 20 DMA is at as well. So that becomes the first level of support that you're looking at. Resistance 26,100, 26,200. That's as per the options data. And the Nifty bank, yesterday that was a star yet again. And you'll have to say that will have to lead us ahead because the 20 DMA is close to around 800 to 900 points away from yesterday's close to around 1,000 points actually on the Nifty bank itself. Stocks that I'm looking at, Saman Capital, towards the end of trade yesterday, the stock got slammed. There appeared there was some cash market selling. And as we indicated at around 3:30, 3:20 p.m. itself, that is likely the stock goes into the F&O ban. That's what's happened. The management has put out some clarification. That stock will continue to remain on the radar because of the news flow that's coming in there. The street is a little bit skittish on this IHC deal, though the management is saying they're working towards closing off that deal. And with the stock in the F&O ban, it adds that element of volatility as well. So that's going to be a stock that we'll be keeping on our radar.
Okay, all right. So we'll keep Saman Capital definitely on the radar. I mean, will there be any pullback? Will there be any clarity on the road ahead? That was a big newsmaker last afternoon. By the way, like I said, Asian markets are mostly having a great run, particularly Japan and South Korea. The Japanese market is running away, almost 3% up now. There's the added excitement around a potentially large stimulus, which the government has been promising, and it could be announced as early as tomorrow, which is why the yen has also been falling. So that's the added, excitement in Japan. But yes, I mean, all the other chip-related, shares, even SoftBank, all of them are driving that market higher. The dollar yen still at about 157. The other markets in the region, South Korea is up about 2.7%. We just had Hong Kong on the screen. Hong Kong is actually not, sharing too much of that enthusiasm. You can see the Hang Seng absolutely flat, but Taiwan's doing really well, 2.5% up, largely up. Now, what does that mean for us? Let's see what the implied open is indicating. Can the bulls continue their winning streak? Well, that's the sense right now, with about a 60-point start, and then we'll take it from there. So let's get to the equity call of the morning. Herald van der Lind of HSBC says that there is only so much AI exposure that investors can build in Asia, especially in Taiwan and Korea. In 2026, he expects to see a pivot away from these crowded trades with more focus on India and Indonesia. He says while retail investors continue to power the China market higher, we need to see signs of an earnings recovery. So that's a slightly favorable view on India that HSBC is maintaining. Now,
I don't know what the note is titled. I think it's titled Anti-AI Trade.
it is?
I mean, look at what he said. He just read out the quote, right? There's only so much that people can buy into the AI stocks. And in 2026, they'll focus on the non-AI stocks.
I've been waving the anti-AI trade flag for a while. Everyone's been laughing at me, but let's see. Hopefully, we see a little bit of it's just normal portfolio management, right? You do that. You do not put all your eggs in one basket. It's rule 101 of portfolio management. Anyhow, let's, before we introduce our guest, let's actually play out a very interesting soundbite that we got from the US president once again. He's again doubling down on his criticism of Federal Reserve Chairman Jerome Powell, saying that he's not lowered interest rates fast enough. And once again, there is a threat that Trump wants to fire Powell.
Mortgage rates are down despite the Fed. I mean, Scott, you got to work on this guy. He's got some real mental problems. No, he's something wrong with him. It's just sweet. I'd be honest. I'd love to fire his ass. He should be fired. Guy's grossly incompetent, and he should be sued for spending $4 billion to build a little building. I'm building a ballroom that's going to cost a tiny fraction of that, and it's bigger than the whole thing put together. You got to work on him, Scott. The only thing Scott's blowing it on is the Fed. Because the Fed, the rates are too high, Scott. And if you don't get it fixed fast, I'm going to fire your ass, okay?
Oh, good God. Now, there were a lot of chuckles in the audience, but, I mean, is it theatrics? Is it more than that? Is it a veiled threat? Well, Mr. Trump, you never know. So he's looking to fire not just the Fed chair, but now the Treasury Secretary as well. We'll see. Need to watch this very, very carefully. Anyway, we have Neeraj Sheth, founder and CIO at 3R Investment Management with us. Neeraj, always a pleasure to be speaking with you. Thank you so much for joining in. So I'm not going to ask you whether you believe what the US president just said or not. Let's park that aside. But the more important question for us here in India, is there a real anti-AI trade that people are thinking of? And if yes, can we hope to be beneficiaries of it? Your thoughts?
So first of all, I don't think you need an anti-AI trade. I think you need a diversification trade.
Yes.
And that works in favor of India. Obviously, India missed out on a lot of the rally if you look at the last 12 months. And some of it is obviously the whole AI euphoria, and that has been going on. And with the NVIDIA results, basically, it just reinforced that trade is still there. But I think where India plays, in my view, is as we go into the year end and next year, is one, the GST cut. Obviously, it's playing through the system now. You see some cyclical recovery in the earning after the bottoming out. And I'm still keeping my fingers crossed on the trade deal. India is still waiting for, obviously, the trade deal, which will bring some impulse for the market rally. And from a diversification standpoint, when I look at the globe, I think India actually looks good going into next year.
Yeah, no, absolutely. India looks good from a diversification point of view. Neeraj, just a quick word on the December meeting from the Fed. We get the jobs data for September tonight. October will be bunched up with November whenever we get that. Most likely, I guess, in December. But what's your sense? Will we see another rate cut? Will we see a pause? I mean, I guess it's gotten much more divided now.
I think it's much more divided, and hence, to some extent, Chair Powell's word carries more weight, in my view. And he did give a preview in the last press conference around December not being a done deal. And you've seen the market repricing the December cut down to now less than 40% chance for a cut. If I look at, obviously, where things are, the financial conditions are still easy. The inflation is still sticky. And the data is, one, absent for a while, and you have some level of potential distortion because of the shutdown and reopening that's happening in the US. I think the December is not a done deal. I still think Fed has 2 to 3 cuts in the pocket over the next 12 months. But the chances are that the Fed pauses, waits in December, and waits till more data to go again in January. So I think that's a real possibility of no rate cut. And you've seen that playing through, obviously, the dollar rebound and to some extent the gold price moves in the last few weeks.
All right. Yeah, Neeraj, I was going to ask you on gold. What's going to happen to gold? You know, the call out there was that, in fact, gold's going to trend higher, and suddenly you have some kind of stiffening with regard to the dollar index, some uncertainty with regard to those rate cuts as well. And the dollar index has been looking a little bit skittish. However, central bank buying as well is something that's been pushing the gold prices up. Where do you see gold headed from here on?
So I remain positive. I don't think I'll change my view on the short-term moves. The positioning and the shift in terms of the Fed expectation did cause, obviously, some volatility in the gold price. And we've seen, obviously, in the last three discussions we had, every time we were close to 4,000, we cross, we come back, we cross and we come back, and we're still there. But it's still above 4,000. If you take a huge step back and think about the drivers between the central bank demand, the debasement of the currency risk that people are worried about, I don't think that the gold price is something which is in a secular decline here. It's correction. It's a healthy correction. In a 12 to 18 month view, I think gold still has meaningful upside from here. So I would keep gold as a hedge in the portfolios.
By the way, on the dollar, Neeraj, dollar is now it's above the 200-day moving average last night. It's taken that out. And we were talking about the Fed, right? What it'll do. And the October-November bunched up data we will get in December, but after the December FOMC. So in that sense, it's kind of it's flying blind, so as to speak, right? Neeraj?
So two things. First, on the Fed, I do think they still have access to a lot of data. Obviously, the job reports and some of the critical data is getting delayed because of the shutdown. And hence, I do think the risk of Fed pausing in December, because obviously they would like to see more data before they continue on the easing path. The second, from a dollar index standpoint, I do want to highlight there's one currency on the other side of this index, which is the Japanese yen, which has seen a meaningful move over the last few weeks since the elections. So it's not just the dollar strengthening against everything. Dollar obviously has seen strengthening, I would say, more in the third quarter than the fourth quarter. And if I take a step back again, think about the question around, obviously, the Fed cuts path forward, the point about the new Fed chair appointment that will come in the next couple of months, the whole question around the Fed independence, the fiscal sustainability. I'm still in the camp that as we go into next year, we'll see potentially more dollar weakening rather than strengthening from here.
Got that. Neeraj, we'll leave it there. Thank you very much for joining us. Good speaking with you. Appreciate your time here on CNBC TV18. Well, I think, we'll just quickly run you through the interactions which are lined up. At 8:35, we have the management of Dodla Dairy to talk about the quarter which has gone by. Remember, these companies have done phenomenally well in that space. 9 o'clock, Shweta Daptardar of Elara Capital will discuss the NBFC demands from FM and Samman Capital matter with regards to, of course, what the Supreme Court observations were. Sandeep Tandon joins us from Quant Mutual Fund at 9:20. He's a market master of the day. 9:35, we will have we'll bring you a discussion around demand trends in the auto space. Basically, the big question is, are both for two-wheelers and four-wheelers, the GST cut induced demand trends continuing? We'll also be speaking with Neha Agarwal of JM Financial Institutional Securities. Their conference is underway, and we'll sort of do that in terms of what deals they're seeing out there. And Lata will be speaking with HSBC's Pranjal Bhandari on It's the Economy. That's at 10:15.
Well, time to slip into a quick break. We've got a lot of stock-specific action to track for you in a special Top 10 segment. For the time being, I give you a sneak peek. We're looking at Adani Enterprises, Vedanta, Ambuja Cements, NBCC, Mahindra Holidays, Godrej Properties, Samman Capital, and City Union Bank. All of them will be reacting to positive news flow. On the flip side, we have MediAssist Healthcare and Sula Vineyards that will be reacting to negative news flow. Take that break, come back, we get into further detail on all of these names.
Welcome back. Well, like we've been telling you, cues across Asia are fairly optimistic. Actually, global equities are feeling rather well after those NVIDIA numbers and their guidance. No problem there, selling those new Blackwell chips. So most of the regional markets are up. We're getting an indication that we'll probably start at least 60 points up. 70, almost 70 now. The question is, can the Nifty take out 26,100 in a decisive manner or not? That's the biggest question for the day. Well, we'll get to it as the market opens up, but we also have lots of stocks to watch. So let's straight away get to our team with the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Today, cement is going to be in focus because it seems this JP Associates resolution could finally get underway, Nigel.
Well, that's right. Yesterday it was widely reported that, in fact, this could be the case that the Adani Group gets Jayaprakash Associates assets. And, post-market hours, Adani Enterprises, they say that they've received the letter of intent for the acquisition of Jayaprakash Associates after the Committee of Creditors, that COC, has given the approval. Now, implementation of this particular plan is subject to the LOI terms as well as the NCLT approval. So we'll wait by for that. Now, Jeffries is saying the JP assets, they have a lot of assets, whether it's hotels, cement, real estate, as well as ENC as well. So it will be distributed across Adani Group entities. So, one of the beneficiaries could possibly be, obviously, Adani Enterprises, because they are the one that have won the bid. But the other one could be Ambuja Cements, because the cement assets from JAL, cement is roughly around 9.5 million tons, or clinkers around 6.7 million tons. There is a bit of a dispute for around 2.2 million tons. But all in all, it's a large capacity. And this will be good for Ambuja Cements because they have the least exposure in central region, where as a percentage of the total 110 million tons odd that they have, only 8% comes from central India. So it's a strategic fit for Ambuja Cements. Thumbs up out there. For Vedanta, the shareholders will be very, very happy because they will say that they are the lucky losers. They didn't want them to be too adventurous, put 15-20,000 crores and go into a non-core asset. So that's why I think a bit of a relief for Vedanta shareholders and good news for the Adani Group, namely Adani Enterprises as well as Ambuja Cements. That said, Vinny is on the screen as well. She's joining in to tell us about some stocks in the news. Vinny.
Hi, good morning. So first I'll start with NBCC. Now they've received an order of around 2,966 crores. This is from the Nagpur Metropolitan Region Development Authority. Mainly this is going to be for a project management consultancy services project which they'll be implementing. Obviously, it's a massive order win for the company. Significantly will boost the company's order book as well as revenue visibility in the future improves. So that's why we'll see green on the screen for this one. Mahindra Holidays, that's the next one. The company has entered into a leisure hospitality business segment through a subsidiary under the brand name Mahindra Signature Resorts. They are aiming at around 2,000 skis by FY30. So obviously a strategic step moving beyond that core membership club model. So that is a positive there for them as well, and we'll expect green here. MediAssist, that's the next one, a material subsidiary of the company, that is Paramount Health Services, said that there was a cyber attack, an incident that took place for the company. This affected the systems of the company, but that has been restored. So neutral to slight but negative move that we could see for MediAssist. Sula Vineyards, that's another one we'll keep an eye out on. Now, ICRA has reaffirmed the credit ratings for Sula Vineyards and one of its subsidiary. The long-term rating remains at ICRA A+. And short-term ratings also stay what they were given before, but there's a revision that's coming in terms of the credit outlook. So that is where it is moved to negative, and that is a bit of a red that we could see for Sula Vineyards. Godrej Properties is the last one. We'll expect green here as they've announced an acquisition of around additional land of 3.8 acres. This is in Bangalore, south of Bangalore. This will unlock around 2,400 crore rupees in terms of revenue for the company. So positive there as well.
All right, Vinny, thanks very much for that. Well, we're going to talk about Saman Capital from the financial space. I mean, the stock was absolutely smashed by close. And of course, City Union Bank is the other one. Gaurav has got details on both. Gaurav, take it away.
Well, as Sanman Capital, for investors, it was a complete disaster, at least yesterday, because we saw the stock tanked almost by 12%. So let me tell you what happened earlier. So earlier in 2019, there was a case filed against the company and the earlier promoter, Mr. Sameer Gehlot. In 2024, Delhi High Court actually dismissed the PIL. And after that, there was an appeal made against Delhi High Court in the Supreme Court in October 2024. Now, what happened yesterday is that now the Supreme Court said that there are no actually open investigations pertaining to the allegations in the PIL for Sanman Capital, either from the investigative agencies or from the regulatory bodies. They also made clear that they have not expressed any opinion against Sanman Capital, which means that they have not made any negative observations against the Sanman Capital. They also said that the proceeding was centered around the petitioner's submission for the earlier promoter. Now, when we look at earlier promoter, is he a part of the company? Well, the answer is no. In fact, company says that Mr. Gehlot completely exited the company in 2023, and specifically about the court proceedings, there was no negative reaction for Sanman Capital. Now, what about the IHC deal? Company said that both IHC and Sanman Capital continue to remain focused on obtaining all the required regulatory permissions and to make IHC a promoter of the company. So that is something which is coming positive for Sammaan Capital, at least for today. Apart from that, if you look at City Union Bank, they have also received the credit rating upgrade from ICRA from AA- to AA with stable outlook. So definitely, let's watch out for this stock as well.
Okay, Gaurav, thanks very much. And indeed, let's see if that explanation from Sammaan Capital can put some sort of a floor on the stock, because that's really important. They're saying that they continue to get the necessary approvals along with IHC for that deal, which is what the market was getting very, very nervous about yesterday. So we'll watch out for the stock for sure. Thank you for that, Gaurav. Let's quickly recap our list of top stocks to watch. The ones that have positive news flow are Adani Enterprises, Vedanta, Ambuja Cements, NBCC, Mahindra Holidays, Godrej Properties, Sammaan Capital and City Union Bank. Those with negative news flow would be Medi Assist Healthcare and Sula Vineyards. Okay, so that is the equity list for this morning. Let's head across to Manisha for the latest in the commodity world. Manisha, good morning.
Morning, Sylvia, and thank you for that. I'll start with the dollar index because that really seems to be setting the narrative right now at 100 plus kind of levels. The dollar index is very close to its 6-month highs. Couple of factors here. One, the FOMC meeting minutes do suggest that it was a divided house when it comes to a rate cut for the month of December. And the second thing really is about the U.S. non-farm payroll data that comes in today. So ahead of that, we've seen some strength come in for dollar. The other all currencies seem to be languishing, especially Japanese yen ahead of that stimulus measure that the street is anticipating there. There is pressure or profit-taking that we've seen in precious metals right now. Silver has seen a decline, so has gold. But the important thing with precious metals is with every decline, there is some central bank buying coming in. So $50 for silver and $4,000 an ounce for gold seems to be forming like a psychological support. Profit-taking is what we have seen continuing in base metals as well. So yet another day when copper has seen a decline. There also is a decline in the crude oil prices right now as we see increase in U.S. inventories and U.S. president pushing in a peace plan yet again with Ukraine are some of the factors that have led to profit-taking in crude.
All right. Manisha, thank you very much for that. Commodities in focus there. What we're going to do is go across to Sud now, who's standing by with the top brokerage calls of the day. Sud, what's on the list?
So I'll start with Max Financial. Jefferies has written on the company and it says that it has a buy call and target is 2020 per share and believes that IRDAI has withdrawn its appeal in Supreme Court against merger of Shriram General Insurance with its non-insurance holding company, and that might be positive for Max Financial, which is considering the merger of company with Axis Max Life Insurance. Why? And if this goes through, Axis Max Life will get listed and also it will reduce the holdco discount. And as far as the growth is concerned, Max Finance has been growing well, and also on the valuation front, Jefferies finds it attractive. Now, HSBC has returned on metals and mining. It has initiated coverage with a broadly constructive stance. First one is Hindalco, where it initiated coverage with a buy call and target is 980. Initiated coverage on Nalco with a buy call and target is 291. For Hindalco, it believes that impact of setbacks suffered by Novelis may start fading from FY27. Also, it has initiated coverage on Tata Steel with a buy call and target is 215. For this also, it believes that losses in Europe should start fading very soon. It has a hold call on Hindustan Zinc and target here is 470. It likes silver, but on valuation front, it finds it rich or expensive. It has initiated coverage on Coal India with hold call and target is 374 and initiated with a reduced call on sale and NMDC, and target here for sale is 140 and for NMDC target is 59. It says that both companies are disappointing on the profitability front. Last one is Hero MotoCorp. Yesterday we have seen that JP Morgan had initiated coverage with a buy call. Basically it had upgraded the stock, and now today Macquarie has upgraded the stock to outperform. Target here is 6,793 per share. It says domestic market share for the company has stabilized over the last few months. It sees upside risk in both motorcycles and scooters led by recent GST cut, also because of the festive season boost, and Street is willing to assign a higher multiple for Hero MotoCorp. Some of the catalyst market share gains in ICE two-wheelers and also the ramp up for electric two-wheelers that company has been taken, and also on the margin front, it has been performing very well consistently for the last few quarters.
Okay, all right. Thanks very much. We'll keep all these stocks on the radar as well. So I need to take a quick break right now. Coming up on the other side, we'll be connecting with Dipan Mehta, Director of Lexer Equities, for some fundamental stock ideas. Also, we'll have the management of Dodla Dairy to talk about their business performance in Q2 and the outlook for the rest of the year. Welcome back. So we have, as promised, Deepan Mehta now joining in with some thoughts. Deepan, great to be with you and good to have you on the show. So let's start. Where do we start? We have to start with Sammaan Capital, right? I'm sure you saw all the drama play out yesterday on the stock. Now the company has clarified. They're saying, A, whatever the court ruled yesterday, whatever that order was, it did not say anything negative against the listed entity, Sammaan Capital. Whatever their issues are with the erstwhile promoter, Sameer Gehlot. And B, they are saying that we are still trying to get the deal done with IHC. We are continuing to sort of apply for all the regulatory approvals. Do you think this is going to repair the damage?
Yes, Sylvie, thank you for having me on your show and good morning. See, I think that certainly there is no connection directly, but Sammaan Capital has been a big value destroyer over the past several years or so. And some or the other controversy keeps cropping up over there. Of course, the ownership changes on the way, and that should improve the sentiment. But on the whole, I think its performance also has been quite disappointing. But only thing for Sammaan Capital is that it's really attractively priced. It is very, very cheap. And it's operating in a industry where there is good growth dynamics, considering that real estate is picking up and therefore housing loans also should do well per se. But let's see, I think if you're a deep value player or a contrarian investor and a high risk taker, then certainly you could look at Sammaan Capital, because I think once things kind of settle down over there and the company starts to report steady earnings, the stock price can easily, grow by 30-40% because of better P multiples.
Okay, all right. Hi, Deepan. Good to see you, Ben. What about Adani Enterprises getting the asset of JAL, Jaiprakash Associates? It appears, as per what reports suggest, is they managed to pip Vedanta because of the terms of the payment. Not the quantum, but the terms, a higher upfront payment. That said, if this deal goes through, then what's your view? Ambuja Cements could be a potential beneficiary because they have low exposure, to central India. And Vedanta could actually be the lucky loser. Your take?
Yeah, good morning and thank you for having me on your show. I think, yes, there was some kind of concern amongst investors about Vedanta acquiring Jaiprakash, especially going into another kind of a business, which in a way is unrelated. So from that point of view, there is a sense of relief, but does show that the management is keeping on looking outside its core area of operation, which is not very positive. If they missed out on JP Associate, they'll buy something else. I don't know. That's certainly a risk factor when it comes to Vedanta Group. Especially coming back to Adani Enterprise, I think the stock is pretty much well priced. Look, it's a conglomerate. Many businesses are operating under a single roof. Difficult to track and analyze. But what I like best about the company is that once the businesses reach maturity, they tend to spin it off and actually split the company and give free shares to the shareholders. And that's a great value creating exercise from a minority shareholder point of view. So I would say that if I'm an investor in Adani Enterprises, remain invested. But from a fresh investment perspective, I think there are better choices elsewhere.
Okay. All right. Deepan, stay on. We'll have more questions for you in just a second. We have our first management joining in, first corporate that we are talking to this morning, and it is Dodla Dairy. We have Mr. Sunil Reddy of Dodla joining in, Managing Director of the company. Mr. Reddy, thanks so much for being with us. So let me quickly first run the numbers so our viewers have the right context. Let's put up the Q2 performance of the company. Revenue is up about 2%. You've got gross margin expansion, which has been looking good. So margin has moved from about 25.5% to northwards of 27%. And that's been the big sort of North Star. Overall, EBITDA margin performance is at around the 9.1% handle. And the PAT has grown. Milk procurement volumes were up 13% year on year. So, Mr. Reddy, let's break this down. I mean, how are you seeing volumes play out? And what is the outlook both on pricing and your own margins? This gross margin expansion that we saw in Q2, is it sustainable or was it a one-off?
First of all, thank you for having me on your show. Coming to the thing of the revenue growth, it should have been higher, but we did have a bad first quarter, which was due to the lack of summer and early monsoons, which in turn made our sales in dahi, lassi and other value-added products come down. And therefore, we didn't have a significant growth in sales in the first quarter, which, of course, carried forward for the whole of the half year. Regarding the gross margin expansion, we were able to manage to get it done because of all the three lines of between our international operation, domestic and our cattle feed operation. Going forward, we will see margins to be more stable at the levels which are already there, because this particular flush season, as we call in the dairy industry, where we get a lot more milk has to come in the procurement, has not yet happened. It's also, again, I guess, due to the weather, unseasoned monsoons and or excess monsoons in the areas where we operate. So overall, we think we will maintain the growth in revenue, but we'll have margins will be around the same percentage that we have now.
So let me just clarify. When you say you'll maintain the same run rate on revenue, I mean, revenue has been low single digits. So full year, you're expecting the revenue to be flat?
Full year, we will expect the revenue to go into maybe the higher single double digits. Around the 10% mark is what we expect to be there instead of the 10 to 12% is where we'll land. And that is also subject to February and March, which we normally are good. Again, the summer's coming in. But mostly we should be able to cross the 10% in revenue.
10% revenue, and you said margins will be stable. So I'm just reiterating what zone, what level, because gross margin is at around 27.5% right now. Your EBITDA margin is at around 9%. So if you could just give us some idea, some ballpark range, that will help.
So the ballpark range should be in the same 8 to 9% margins that will come in as the regular margins, and 10% growth in terms of our revenue should be where we will be.
Got it. Hi, Mr. Dodla. Good morning. Good to see you in as always. A quick question then with regard to the growth that you're talking about, 10%. That's the organic growth. And Osam Foods will be on top of that, which you were guiding for around 150 crores, or all inclusive, it will be 10%.
Mostly it will be without Osam 10%, and Osam will add a little more to it because our revenues this year will be crossing the 4,000 crore mark. So Osam will not make a significant change in terms of the revenue that we are doing because it's only going to be consolidating for the 8 months of the operation of the current year.
So ballpark around 100 crores from Osam?
Yes, 100 crores from Osam.
All right. Give us two more numbers then. VAP as a percentage of the mix, that's come down in the first half of the year to around 33%. I think that if I compare it on a like-to-like basis, first half of last year was around 37%. Where do you see this number stabilizing at? And I think in terms of market share, your ballpark 6 to 6.5%. How do you see this number as well panning out? If you could give us the way ahead on both these two numbers.
Regarding the VAP number coming down, it was predominantly because we had a large quantity of bulk sales that we did last year, which was our powder and butter that we sold because we had an inventory buildup which we had sold. That is the reason you see the 37%, and the drop is this year we didn't have enough of inventory to sell. But overall, I think as VAP as such has continued to grow in that 1.5% as a like-to-like of VAP minus the bulk sales. Regarding the market share, we continue to maintain our market shares of 6.5% overall, which is mostly our numbers that the way we look at it. They've not grown significantly, but we are holding on to our market share.
What about Orga Feed, the animal feed division? I think the first half of the year you have done around 83 crores. With EBITDA of around 12-13 crores. How does this number shape up by the end of the year?
At the end of the year, this will be better than last year. We will be growing 25 to 30% compared to last year is what our Orga Feed will grow, and the margins will continue to remain the same. And we have almost reaching 60% of our capacity utilization, although it's been a year and a half since we created new capacity, and we're very confident that it will continue to do well.
So 170 crores or odd would be the revenue for this year?
Yes, sir.
Okay. What about Maharashtra, sir? Your expansion plans here, you've acquired land. So what are the timelines? And also just give us, your reading of the lay of the land in terms of whether this state, which is where we are, I mean, whether the margins will be comparable to your current business. Is it very competitive? Not? But what's your reading of Maharashtra and your own timelines in terms of the launch here?
For the launch year, we were looking at it at anywhere to come into production in terms of 27... let's say 27 March is where we can look at it coming into commercial production. Regarding Maharashtra as a state, although we are looking at Maharashtra more from a production point of view, that is for our procurement, which will cater to our own requirements that we have as we keep growing. Maharashtra is a highly milk available state. There will be competition coming in there. Right now, it's not only the southern companies that have entered into Maharashtra. We will also see a few of the companies from the north entering Maharashtra. But we are confident that the farmers there will continue to increase their productivity and the milk availability will still be strong in Maharashtra.
Okay. So 27 March is when you're launching in the state, right? You gave us a specific date.
Around 27 March is, yes, when we'll come into production in what it is. So Maharashtra for us, although it is basically not more of from a sale point of view, it's more from a procurement point of view.
So March 2027, right?
Yes, 2027.
March 2027, just to clear.
I thought March 26, yeah.
I just wanted to help out Surbi there because she was expecting, March 27, 2026. But that's March 2027. We got that on board. Earlier this morning, Mr. Dodla, I was thinking about Kenya. I had a beautiful trip last year out there. But that discussion for another time. I noticed that Kenya and Uganda, they contribute close to 11% of your mix. How do you see this number scaling out, and how is business looking out there?
Business there is looking quite good. In fact, our volumes have grown significantly from what we were trying to fight for the market share in Kenya, and hope you had a product of ours when we were in Kenya.
No, I missed it.
The margins will also maintain the same profile. Kenya will have a little lower margin, but in terms of percentages, but the volumes in Kenya are larger. And it being 18 years for us, we rather grab market share. So overall margin profile compared to the last year will be the same or a little bit higher, but volumes will be significantly larger.
We'll look out for your product next time, sir.
Okay.
We'll look out for your product next time in Kenya whenever I plan, because I saw a lot of, Indian products there, whether it was autos, whether it was a tractor, we'll look out for your product as well. But thanks a lot for joining in, giving us a fair analysis about the business. You've revised your guidance a little bit in comparison to what you spoke the last time around. 10% growth is what you're guiding for now in terms of organic growth, and 8 to 9% margins. Thanks a lot for joining in. Have a good quarter. We catch up soon.
Thank you, sir.
Well, time to slip into a short break. On the other side, we'll connect with Sudarshan Sukhani and Mitesh Thakkar. They'll be joining in to give us their technical trades. Stay tuned. Welcome back. You're tuned in to Bazaar Morning Call. Well, it's that part of the show when Hormuz joins us to tell us about all those big movers in trade yesterday, and some of them that were backed with delivery-based buying. Hormuz, morning.
Morning, Nigel. And new listings continue to garner attention. And one such name yesterday was Tenneco Clean Air. Made a very clean debut as well. As a 27% surge from its issue price. Ended well over 20% higher as well. And it was among the top contributors to the NSE turnover in yesterday's trading session. Shares worth well over 5,000 crores that were traded on its listing day. And over 10 crore shares were traded, out of which around 4.5 crore shares were marked for delivery. Now, Venus Remedies was one of such movers. It's gained in 8 out of the last 9 trading sessions now, and in this 9-day period, the stock has risen almost 50%. And yesterday's session saw around 8 lakh shares traded. The 20-day average here is less than 90,000 shares. So gains on very strong volumes, and out of those 8 lakh shares, close to 3 lakh shares were marked for delivery. Here too, the 20-day average is just around 33,500 shares, and the stock has more than doubled already in 2025. IT stocks were in the outperformers yesterday. LTTS led that charge with a gain of around 8 to 9%. There was close to 12 lakh shares were traded. The 20-day average here is less than 70,000 shares. HCL Tech also saw volumes that were 3x its 20-day average. Coforge saw volumes higher than its 20-day average. And even on the delivery front, almost 2.5 lakh shares of LTTS marked for delivery. The 20-day average is only 41,000. And for HCL Tech and for Coforge as well, the delivery volumes higher than their 20-day average. Of course, IT stocks will continue to remain in the spotlight today as well after NVIDIA's results. And lastly, Avanti Feeds and all of these potential US trade beneficiaries are continuing to move higher on anticipation of that deal. The 5th straight day of gains yesterday for the stock has gained in 6 out of the last 7 sessions now. The volumes yesterday were the highest in 2 months. More than 1 crore shares were traded, almost 1.5 crore. The 20-day average is 4.9 lakh shares, but even out of those 1.5 crore, only 16 lakh shares were marked for delivery. The 20-day average here is only 1.5 lakh.
All right, Hormuz, but the first mail that we got from you earlier this morning was on NVIDIA, and I think most social media posts, whether it was mine or anyone, it was on NVIDIA. Good numbers, good outlook. CEO sounding extremely confident as well, but tell us, how big is NVIDIA?
Oh, great numbers indeed, and we'll tell you greater about how big NVIDIA is over the course of the day. But the entire concern regarding the AI bubble was put to rest by these numbers. The revenues were better than expectations, EPS was better, the guidance was better, and Jensen Huang, the CEO, answered one very key aspect, whether AI is in a bubble, and he mentioned very categorically that from their vantage point, they see things very differently, and that was enough to soothe the market, and that shows in the Nasdaq Nasdaq futures now almost up 450 points. And you tell you how big Nvidia is. Nvidia in the first 9 months of this financial year of FY26 have reported a net profit of $77 billion. That's a net profit figure. That figure is more than the combined sales figures of both Intel and AMD put together. If you put those together for the first 9 months, that comes up to around $60 billion, and that figure is still lower than Nvidia's net profit for the first 9 months. So that is the kind of extent to which Nvidia has moved its stock from its current lows that it made this year from the tariff tantrums has more than doubled. It's up over 5% in after-hours trading as well, and as a result of which the Wall Street futures are rebounding after the recent sell-off.
Harmaz, one more statistic to that question. Interesting phrasing. How big is Nvidia? And there are so many ways to do it, right? Nvidia's market cap is 25,000 times the market cap of the median Russell 2000 stock. Right? 25,000 times. So, yeah, it's interesting. The other bigger question, thanks very much, Harmaz, for that, is whether this will put to rest nerves. Nasdaq is pulled back 7% from the highs, and will this Nvidia, which is the poster boy, put to rest the debate whether this, this trade has more to run or not? That question is tougher to answer. We'll only find out in the next couple of days. Markets are smarter than one company. It's collective wisdom. But I don't know. Deepan, do you have any thoughts here?
Well, I've also been reading NVIDIA since morning. And all I can say, the first thought which came to mind is that if NVIDIA was listed in India, its market cap would be 2.5 times its present market.
That's a nice one.
Trading at a 41p multiple. And in India, we would have given 100p multiple easily. So I think it just kind of reflects that how expensive our markets are compared to NVIDIA. I mean, the company grows 50% and is available at 41 times, I think. And there are some people calling it a bubble. I don't understand. I mean, it just shows that maybe, we are extremely overvalued beyond bubble territory, or that these companies are really undervalued compared to our universe. So, but nonetheless, I think I wish there was some way Indians could buy such companies and take advantage of a relatively lower P multiple. The Max 7 trades at a P multiple far, far lower than most of our high-performing technology companies like, say, a Persistent or Tata Elxsi or even a KPIT, and much, much cheaper than some of our consumer-oriented businesses, which are anyway 70, 80 times trailing 12 months or so.
Yeah, I think that's well put. Deepan, so the other one I wanted to ask you is IT services. The IT services index was up 3% yesterday. Just a factor of under ownership, etc. Because I mean, it's still a very live debate whether this is, what will AI mean, and whether it'll increase productivity, but then, how much is it going to take a bite out of these companies and their revenue pies? Will it add to it? What are your thoughts?
No, see, Prashant, I've been tracking IT companies for last 35 years or so. And this is the first technology trend in last 35 years plus, which has completely been missed by the Indian software services companies. You go back to Y2K, internet, application development, remote management, all of these trends came and they matured, and Indian IT companies really rode that wave. But this AI, very, very perplexing that why it's not driving revenues. I think industry experts understand it better. And I think some of the investors also understand it better, which is why the P multiples of large cap IT companies are at all-time multi-year lows. So I want to avoid the sector. But look, there could be a trading rally at any point of time. It is cheap. The base effect will come into play. Order book position is decent. If execution starts for these companies, they could have a situation where for a few quarters, they start to report double-digit growth rate. But on the whole, I think it's not great from a long-term investor's perspective, and I would remain underweighted. But from a trading perspective, I think it may be poised for a 15-20% above a rally. That's certainly possible at any point of time.
Got it. All right. Deepan, always appreciate your thoughts. Thanks a lot for joining in, giving us some ideas on how you view it. And what stood out today was the NVIDIA bit. Well put. I like that. Interesting one. Thanks a lot. Well, time to slip in a short break. On the other side, we'll get the pre-open rate. We'll also have Shweta of Elara Capital. She'll be joining in to help us out with the NBFC demands, and also what's her view on Saman Capital. Stay with us.
Okay, welcome back. There's about a minute to go for the pre-open session to kick off. 15 minutes plus 15 minutes plus to go for the market open. Sudarshan Sukhani is with us, and so is Mitesh Thakkar. Gentlemen, good morning. Great to have both of you with us here. Appreciate it. Mitesh, you go first. How are things set up? Another up day. This time it was IT which fired in a big way. It's something or the other, right, every day. And the Nifty is kind of getting closer to that 26,100. What's your sense?
Morning, Prashant. So I think today, we'll be most likely open around the 26,100 mark. And I think immediately after the opening, we'll figure out whether there's strength to continue beyond that and test the all-time highs. Or do we see, again, some kind of profit booking at 26,100? My sense is that there could be a chance of continuation on the upside post the gap. As you rightly said, the bank Nifty is outperforming. IT, which was the entirely underperforming path, has started getting into upside traction again. So good chance of things happening over there as well. And Reliance remains, positive on the near to medium term chart. So in that sense, I think good chance that we might actually now be heading towards the all-time highs.
Okay. All right. Got that. Mitesh, you want to go ahead and give us a couple of your trading calls as well?
Yeah. So I have a mix of buys and sell calls. On the buying side is the IT name and a banking name. Before just something which made a flash swing breakout. So buy here with a stop at 1832. Look for targets of 1905. And ICICI Bank also had, a positive candlestick pattern across overs on indicators. So buy with a stop at 1369 for targets of 1410. And on the negative side, a breakdown on the charts of JSW Energy. So keep a stop at 526, look for targets of 485. And AP Apollo, very similar kind of a breakdown pattern. Sell with a stop at 1745 for targets of 1670.
All right, let's bring in Sudarshan as well. Sudarshan, morning to you too. The pre-open rates have started coming in right now a little all over the place. Sensex is down, Nifty is up. So I think we'll just let it settle down. But Sudarshan, what would the approach be for you now that the index is at 26,000?
Yeah, good morning. See, from Monday onwards, I have been saying we should be long. The trend is in the mild uptrend persists. And we are also seasonally entering into an area where the markets usually end up higher towards the end of the year. That view continues. Now, the world markets are also conducive. That's an extra sort of icing on the cake. But even otherwise, we would have done well. So stay long. If you don't have a long position, buy. Move your stops to 25,800. Expect volatility in between. That's nothing to be worried about, and we can't avoid it. But be on the long side of the market.
Okay. So stay long. That's the advice. Let's also talk about stocks. What are you working with today?
Well, Indian Hotels is a buy with a stop under 705. Granules is a buying opportunity, stop under 545. And after a long time, Hind Unilever has come in my list. Maybe something is going on in FMCG, maybe. With a stop under 23.95, it's a buy. And finally, 361 is a buy with a stop under 1100. It's an all buy list. And I would recommend stay on the long side for stocks also.
Okay. All right. Sudarshan and Mitesh, thank you very much for the trading ideas. We'll come back to you once the pre-open session settles and then get some final trading cues from you. For the time being, let's shift the focus to the BFSI space. Yesterday, the representatives from the BFSI body, FIDC, they met Finance Minister as part of the pre-budget consultations, and they had a bunch of demands. One of the main demands was to seek a refinance window, something similar to what the National Housing Board has, and so on and so forth, and some higher thresholds as well when they're looking at the SARFAESI Act. Shweta Daptardar is with us, who tracks this space quite closely. Shweta, I don't know if you caught some of these demands. We also had the FIDC CEO with us explaining why they want to push for these changes, with the centre. Your first thoughts on this and how you're looking at the NBFC space overall?
Good morning, Surabhi. So yes, these FIDC demands, in fact, especially pertaining to having a refinancing window for NBFCs, has been a long-drawn demand. Like I'm hearing this for over 3 years now, and rightly so, because larger part of NBFC business model success is largely contingent upon liability structures. And if you look at the recent periods where a year ago RBI or the regulator had turned pretty stringent, so there were constraints on growth. Thankfully, things are turning around for better. Going forward, we believe, especially post Q2 FY26 earnings, NBFCs are standing at a vantage point. Things are only looking up going forward, especially in the second half of the fiscal.
Okay, all right. Hi, Shweta. Good to see you win. Looks like you're set for the winters, huh? All right. So that's about that. But the big question is going to be on Sammaan Capital. What's your view? Valuations, there is support. The question is whether or not that deal is going through. What's your view?
Yeah, look, Nigel, market doesn't like uncertainties, and for good or bad reasons, whatever, Sammaan Capital has been in news for a fairly long period. More so I would definitely refrain from giving a sort of a value view on the stock per se. But if you look at the whole HFC space, especially for NBFCs, it has been a slightly tough going because banks have been proactive in terms of interest rates. Also, if another 25 bips rate cut is in offering in the forthcoming RBI policy, then there is no way that NBFCs or HFCs can deal with this kind of competitive rates. So I believe slightly not very bullish on HFCs. Even for AHFCs, affordable housing finance players, the going was slightly tough in the quarter gone by, where we saw some stress in the micro lab segment.
So a little cautious on housing finance and even the micro housing or the affordable housing finance companies. Got that. So what do you like, Shweta? Tell us that. I mean, gold financiers, they've done so well this year. Then there are the wider, bigger retail plays. Bajaj Finance, what a move on the stock this year, right? So for 2026, what's the best or couple of the best NBFC stocks to own?
Yeah, so Q2 FY26 earnings through three important trends. One is we clearly saw asset quality challenges bottoming out for NBFCs. So barring CV, micro lab, two-wheeler loans, and a little bit of AHFC stress, most of the segments have started easing. Personal loans and credit cards have started easing. There is some amount of stress in unsecured business loans, but second half, as the activity picks up and GST simplifications continues to fuel demand, and post festive season demand is looked to sustain, then second half is definitely better. Against this backdrop, we definitely see diversified NBFCs, say likes of Bajaj Finance, L&T Finance, even Shriram Finance, wherein 60% of the AM mix today is largely coming from non-youth CV portfolio. So these names definitely stand to benefit. Gold financiers have definitely seen a very strong bull run, but considering the fact that gold prices will continue to stay higher, I mean, that's what we are hearing from the industry experts, gold financiers will remain in limelight. Having said that, we continue to maintain positive stance on Muthoot Finance even a year ahead because of course, the growth today is driven by gold prices, but Muthoot Finance definitely have those right fundamental ingredients in place to post 20% loan CAGR even for next 2 years. So yes, gold financiers will remain in limelight.
Okay, all right. And final question before I let you go. SBI Cards, you believe it's time to swipe it? It's been a big underperformer. I look at the ROAs, I recall they should do ballpark around 5%. That number dipped to around 3%. Various issues on credit quality on their mix as well. You believe things are now getting sorted out and should look up from here on?
Yes, Nigel, so absolutely right. After a huge, strong string of 5% ROA for 5 long years, those dip in FY25 to 3% odd. Now, where they are standing is where credit cost challenges are bottoming out. The 2020 and 2023 bad customer portfolio write-offs is largely behind. So 2 quarters down the line, wherein we see credit cost materially declining, that's exactly the point where cards in force accretion will start picking up. And that's actually the starting point of revenue driver for SBI cards. So just like most of the NBFCs, SBI card today is standing at a vantage point where we start seeing things looking up as asset quality challenges are bottoming out. So we definitely see 4.5% ROA on horizon by FY28. And we definitely see spends traction supportive. So if you see post Diwali spends traction this year vis-a-vis last year has been holding up pretty well. So asset quality challenges bottoming out, spends traction picking up, definitely bode well for SBI cards ROA trajectory to start picking up from here.
Okay, all right, Shweta. Good to have that chat and stay safe. It's getting cold. We can make it out. Thanks a lot for joining in and giving us your call. We look forward to hearing your thoughts in the time to come. But it's 9:10. Let's get Sudarshan back on the show. Sudarshan, what's your 9:10 call?
It's Indian Hotel buy with a stop under 705.
Checking in. Got it. Thanks, Sudarshan, for that. Mitesh, what about you?
I'll go with a negative call on JSW Energy. It's opening with a 2-3 point gap up, but I think, good time to take a short with a stop at 526.
Short on JSW Energy. Got that. Thanks a lot for that, Mitesh. Well, let's focus on a couple of names. And HSBC has written a note on metals and mining. They've basically initiated coverage on a lot of names, and they're broadly constructive on the sector. Let's talk about a few of them. On Hindalco, they have initiated a buy rating, target price around 980 rupees per share. They say the impact of the setback suffered by Novelis will gradually start to fade from FY27. On Nalco, they have initiated buy rating. Target price out there they have is around 291 rupees per share. And on Tata Steel, they have a target price out there at around 215 rupees per share. What are they talking about? They're saying the losses in Europe should gradually start to fade away as well. And on Hindustan Zinc, they have a target at around 470 rupees per share. Though they like silver as well as the zinc exposure that the company has, but they're saying that the valuation is rich on that front. On the PSUs, they don't appear too enthused because on Coal India, they have a hold rating. Target price at around 374 rupees per share. While on SAIL as well as NMDC, they have a reduced rating out there. On SAIL, the target price is 114 rupees. On NMDC, is around 59 rupees per share. They make this point that both companies have muted profitability and they're also increasing capex. So that's what HSBC has to say on the mines and metals space with regard to the initiating coverage notes today. Okay, all right. Let's focus on the chemical space then. Navin Fluorine, there are a lot of brokerage notes that have come in there. Sudarshan is stepping in for Sonal. Sudarshan, tell us, what are they saying?
So if you remember, in Q2, Navin Fluorine had outperformed the peers, and the very next day to the earning, the stock had moved 16 to 17% higher. Now, yesterday, Navin Fluorine had held analyst meet, and the commentary is looking largely on the positive side. Company is saying that one of the molecules in CDMO business delivered well in Q2, and for the same, it's expecting a repeat order in Q3, and debottlenecking of MPP capacity in Dahej announced post Q2 results indicates visibility on capacity utilization even of existing facilities. And global demand for R3 is of 3 lakh tons, and companies in discussions with Honeywell to increase HFO production with rupees 100 crore revenue potential. And new HF capacity expected to be commissioned by January of 2026. Brokerages largely remain positive. Jefferies has a buy call with a target of 6,635. It expects 44% EPS CAGR over FY25-28. Citi has a sell call with a target of 4,900, and Centrum has a buy call with a target of 6,000. Now coming to the auto sector, Hero MotoCorp, another positive note. Today, Macquarie has upgraded the stock to outperform, and target here is 6,793 per share. It says domestic market share for the company has stabilized over the last few quarters. It sees upside risk in both motorcycles, scooters, and that would be led by GST cut, recent festive season boost, and also company has been undertaking new launches. Catalyst are market share gains in ICE two-wheelers and EE electric two-wheelers volume ramp up that company has been undertaken. And also on the margin front, it has been performing consistently over the last few quarters. And on the back of all these, even valuation gap that company has against the peers might narrow.
Okay, all right. Got that. We'll keep Hero Moto on the radar as well as, of course, Navin Fluorine. Thank you for that, Sud. Quickly looking at some interesting stocks from yesterday, the ones that got a big drubbing, they're seeing a revival and recovery. Saman Capital in the pre-open is up about 3%. And remember KEC International, that 10% slam dunk on KEC, it's also up about 2% right now. I've not pulled up Grow on the list. It'll be interesting to see if that 10% down move on Grow, whether that was just a one-day phenomena. Okay, that's pre-open. Grow down another 7% in pre-open. Seems fairly sharp. So we'll see how this plays out. Overall, Nifty managing to hold on to a gain of about 80 points as we start off. And it's just above that zone, which became a bit of a resistance. That's 26,100 thereabouts. So let's see if we get a decisive breakout above it or not. The leaders, Hindalco, Adani Ports, Bajaj Finance, Infosys. By the way, IT is still running quite well. Yesterday was a blowout IT move on a whole bunch of mid-cap IT stocks as well, not just large cap. And some of that is continuing. The IT index up 0.5%.
Absolutely. And, maybe just a couple of seconds to go for market open now. 0.5% higher on the Nifty IT index. PSU banks is the other area which you should keep an eye out on. Many of these stocks have had stealth moves. They've all done well. Keep in mind that. So if you're trading, you've got to see the recent performance and the run-ups, etc. But that's the other area. So just a second to go and we'll have the opening bell. A third higher on the Nifty. 26,100 pass on the Nifty. 59,280 on the Nifty Bank. We're about 0.1. Actually, that's really flat. The sensex is up 0.17. The small cap index is up about 1/3%. And I think the mid-cap index will come up with some gains as well. It's a super, super strong start, especially, I think, for many of these mid-cap, small-cap movers, which we will come to in just a bit from now. But otherwise, at the index level, it's kind of quiet. 3-1 in favor of advances. The number of stocks up and down is early, but it's indicative of a decent kind of spread. The Adani stocks are all higher. Adani Enterprises, Ports, occupy the number 1, number 2 gainers list. And the bulk of the market, at least on the Nifty 50 heat map, shows we're opening in the green. HCL Tech is down and a few others, but just 6 or 7 names on the Nifty opening lower. Otherwise, it's all green. Surabhi.
Look at Grow. It was 10% yesterday. It's down 8.5% today. Now, these kind of technical issues, they do make investors nervous. Not the best of experience you want with an IPO. Touch sky-high levels and then such sharp drawdowns coming through, extreme volatility, and investors are having to stomach it for the time being. The other one is Saman Capital. We're just telling you that in the pre-open it was up about 3%. Well, it's not able to sustain. It's lost that gain and it's actually down about 0.5% right now. So two important stocks, need to see how they shape up. On the large cap screen, like Prashant is saying, Adani is still in leadership position. Big asset they're looking at, obviously, taking over Jaiprakash Associates. So 1% up on Adani. Tata Motors, passenger vehicles, finally manages to rise on the green side of the screen. About 1% up there as well. Reliance is a big support for the market today. 0.6% up on Reliance. Then you have a couple of financials doing well, which includes names like Axis Bank, Jio Finance, Shriram Finance. Even Bajaj Finance is up about 0.5%. Financials are actually, NBFCs are doing better than banks this morning. That's one trend that's very, very clear. On the downside, there's HDFC Life, there's ICICI Bank, there's Bharti Airtel. That's pretty much it. And some of the IT stocks, they're cooling off from yesterday's smart run. So HCL Tech, Infosys. Some of these stocks on the lower side of the screen, Nigel.
Well, as Saman Capital started in the green, but just take a look at that stock. Slam dunk from the high. It's down close to around 5% from the high. So for the time being, the stock actually has got sold into that little kind of bounce that we saw. Grow, that's recovered a little bit from the lows of the day, though it's still down close to around 5%. It was down 8%. Physics Wala, the other one, in fact, that is lower, and it's fallen on decent volumes, down close to around 3%. So both those two newly listed companies actually trading in the red, with a fair bit of volume in the first few minutes. Tenneco, one of the newly listed companies, came on board yesterday, trades at more than 20 times EV upon EBITDA, but they believe that there's a good penetration scope out there as you move from BS6 higher. The cost per vehicle will in fact move up. Exports is another big potential. So that one, after the fund-based buying that we saw yesterday, it's up another 3% in today's trading session. What's losing out then? Both those two, Physics Wala as well as Grow, both of them a little bit lower. Sagility is down just around 1% or thereabouts, but volumes quite high on that particular name. I think Vedanta was seeing some green just to kickstart trade, so I think we should get that as well up for you on the screen. Vedanta, yeah, it's good news if in fact they don't go and get over adventurous, so the street is reading it on that way. And besides that, yeah, I think that's about it. Nifty holding with a gain of around 40 points, 26,100. Nifty Bank still to get off the blocks as we speak.
Just wanted to mention, by the way, that while the JP Associates resolution finally gets underway, Prakash, Power is the one that's running with a lot of excitement. 10% up on that stock. It's only a 22 rupees stock, but yeah, it's running and the volumes are picking up. Fairly high volumes actually at this point of the morning. We're talking, I think, almost 85 lakh shares trading. So yeah, a lot of excitement there.
A lot of excitement, and where are we at now with regards to Nifty Bank is now kind of slightly in the red. Maybe just put up two indices. One is the Nifty IT Services Index, and I think that'll give us a quick sense of what's happening after the 3% pop. It's up another 1/3% higher, and maybe just look at the Nifty PSU Bank Index as well, where I think you will have some change coming up. It's absolutely flat. So. It's done very well, but I mean, this is another area, at least if you look at, just the overall mood, people seem to be very, very bullish. Okay, individual names, etc., still coming on. Maybe we look at something like a Loris Laboratories, where there's been some buzz of a block for the last couple of days. I think it was part of Nimesh's chatter list as well. It's down another 10. It's been coming off last 2 days. Another 1% odd lower at this point in time. So enough and more activity coming up at this stage. The Mahindra & Mahindra stock, right? I mean, it's the analyst day at Mahindra & Mahindra. And, it's a big one. It's a big affair with all the group and company-specific CEOs there present. We'll have something very special from that. For you, later. But I think, long-term guidance, etc., is something which markets will wait out for from the Mahindra management and, of course, individual company CEOs from the group as well. Okay, Sandeep Tandon is with us, founder and CIO, Quant Mutual Fund. Sandeep, good morning. Great to have you with us here. Thank you very much for joining us. It's been a while since we've had you on the program, so good to see you. So just update us with your view, Sandeep. Just to begin with, and then we can build on that. What's your sense, markets?
Prashant, I have been slightly more constructive than the market participants in general for maybe for 1.5 months or so.
Yeah.
I'm saying that on a couple of reasons. See, first of all, let's talk about the important concern and why we're positive. The most important thing which we think, we believe will support the market, the USD INR pair long-term depreciating cycle is peaking out. Okay, which means the probability of appreciation from the current level is very high, and at least the downside is getting capped. So that's a very important phenomenon. Second thing, we are also looking at exhaustion seen the FIS selling. The FIS selling exhaustion we have seen, and we all know December it will die down further, and January is the new year allocation. So that could be a second trigger. Second, the third most important thing is the earnings cycle. We have been quite vocal. We have been saying that September quarter earnings should bottom out. And I believe it has bottomed out. The earnings were much better than the consensus. Don't compare YOY or quarter-on-quarter, but compare with the consensus. So it was far superior. Now you look at additional trigger like GST or income tax benefit or even the lower interest rate. And last most important point, the sentiments. The sentiment is extremely bearish. People have not made money. The frustration is clearly visible. Rotation has been stuck. So it's a psychological problem. The background is constructive that what is required for a pullback rally. And we have talked about that you will see all-time high as early in December itself. And I'm talking about not only the Nifty and the many frontline indices. So we are net constructive, and we are nearly 98% invested in the market.
Okay, Sandeep, hi. All right, so more constructive than most. That's how you're describing it. Good to know. And good to have you with us this morning as well. So tell us then, what's the thinking and what's the approach at this point in time? Because, it's not barring financials, but I think there's a broad consensus. Most people are optimistic on financials. I guess it's been a far more bottom-up market. Within the Nifty, look at the variance. You have a Maruti and Bajaj Finance on one side. You have a Tata Motors, now it's PV on the other side, or other such stocks, that have had a very, very rough year. So how are you looking at, portfolios and fresh allocation at this juncture?
So, Survi, frankly speaking, we are trying to identify the sectors of stocks which are in neglected territory. Let's take example within BFSI. Insurance looks better to me, okay, as compared to banks, because they have now traded in a neglected zone for a while. Similarly, within the BFSI space, the NBFC we have been positive for the last few months. We felt that they are more constructive than the private sector bank. Now, Obviously, some of the large private sector bank has also corrected in last few months. So even those names looks pretty attractive from the current level. So our strength comes from the background. We try to identify the neglected territory, hated zone, where people are not keen to build. And you just look at the new age companies. Last 1 year when the opportunities was not there and new age companies were showing at least the top line growth, if not the bottom line. Okay. So the people with money got shifted there. I think that trend has reversed. Money is moving out and moving toward these neglected large cap names where the quality of management is good and earning visibility is even better.
All right. Hi, Sandeep. Good morning. Good to see you. And as always, in terms of your contra call, tech as well, you all were creeping in. Have you increased allocation over there?
On the banking side?
No, tech. Tech, ignored, underperformed, maybe under-owned as well at current reckoning, suddenly showing signs of coming back to life. Tech, are you all increasing exposure?
So we were actually have zero exposure, this exposure. Now we have 5-6% type exposure across various schemes. So we have built. So yes, they were neglected. It fits into the thesis, and frankly speaking, earnings were better than the expected. Right? So I think but if you ask me, if you are seeing any visible trigger for these names to rally sharply, it's maybe pullback rallies are very much on the card. So I think I will like to capitalize on the current rally and then maybe reassess down the line few months or maybe a quarter or so.
Sandeep, can you talk about some of the unloved, with full disclosure, any specific kind of course, not an inducement to buy anything, but just as an example, where are you seeing opportunities?
As I said, that opportunities is very clearly in some of the private sector because they have some of the large private sector name corrected sharply. Okay, they have been consolidation or correcting phase. I think they are now reaching those neglected zones sort of thing where people have slightly, and these were the names which were in the admired territory for a while. So I think those could be a trading opportunity. Insurance I talked about. I also talked about pharmaceutical as a sector, which I have been generally very bullish for a while. I think US concern has been sorted out and people still don't want to participate in that space. Again, grossly neglected zone. FIs don't own these names, only some of the domestic institutions have some of these names. So these are the areas which I think there could be opportunities. See, we at Quant, we always try to assess our downside. So we always say we are in the business of risk management. Returns are byproduct. So if you can identify, if you can cap your downside, then it works psychological better rather than chasing the momentum, rather than I will look for at this point when we are very certain that Nifty will make all-time high. I will not be surprised if it make this month. Okay. So with that background, I will like to look for neglected and beaten down names where we have seen correction and quality or earnings is slightly better. Maybe various reasons people have not liked it or ignored it. So I will prefer to take advantage of this opportunity and build these names in our portfolio.
What about something like a Saman Capital?
We don't comment on individual stock. We don't own and we don't like it.
Okay.
Okay, but since we're talking financials, let me kind of move to another part of it. That's your business, the business you know so well and you've been running for years, Sandeep. Mutual funds, asset management and wealth. And let me also take this opportunity to get your take on the latest proposals, right? So there was that 5 basis points additional charge that was levied in lieu of exit loads when they were banned. So now SEBI is saying, let's not do that. There is some talk of rejigging the TER itself. I'm not talking about the brokerage debate, and I think we've spent enough time on that. But just chip in, generally, if these rules are implemented in their current form, what does it mean for margins and business for AMCs?
So it will affect more the smaller names or the budding mutual fund who are just building up. Because if you really look at, if I go by all the cost structures in the mutual fund industry, it takes typically 8 to 10 years to achieve a break even. Okay. Now, if these new rules are implemented exactly in this form, obviously we expect that break even can extend it to 12 to 15 years. And that will be not a good news for the mutual fund, particularly for the new players. The existing large players have crossed that boundaries. Okay. So it doesn't affect them actually. In fact, they will be actually indirectly beneficiary if the smaller names or smaller companies get affected. See, See, the one is the not only tier part, the second most important is also the brokerage piece. I will touch base again because if you cut down to 2 bps, okay, this is the area where people actually put in effort on the intellect side. Okay, so what we have requested to the regulator is that please look into the all the cost structures of other entities, okay, who are the supporting system of mutual fund. They have grown along with the mutual fund industry, but the rules are not applicable in terms of capping their income, where we are capping our revenues of the mutual fund, and we are now talking about on the brokerage side, because if the brokerage rates cut down, simply the incentive of a market in terms of research will be impacted, because ultimately sell side do a better job in terms of depth, and the breadth of the market is very important. We cannot cover 1,000, 2,000 stocks. Neither we have bandwidth, nor we have that much capital to do it. And one client-centric research is always going to be challenging. So what is very important is that we should not hold. If you make it 2 bps and someone, let's say today any smart money manager wants to move and set up his own company, nobody will service him. And 2 bps he will not get the service. And then if he has to build the entire cost structure of 10 analysts or 15 sector specific
It's not viable.
It's not viable. Even if it's not break even, he will never able to actually break even in his life. That's the way I define it. Because it will take long time. So what is our urge to the regulator is that we are very happy. I agree the cost structure should come down as the size has grown, the benefit should be passed.
Yeah.
But this should be applicable to the other supporting system also, okay? And that is very important because all other supporting system are largely electronic. They are still charging on AUM basis, not on the transaction basis. So on the intellect side, we are trying to cut it, but on other side, we are not. That's, I think, a lot of messages and the presentation has gone. I'm sure the regulator will look into it. So we remain optimistic on that side. And so far, yeah.
Yeah, no, absolutely. Take your point. And I think I've heard a similar argument from a lot of other AMC heads as well that, mutual fund houses do not have the capacity to set up full-blown research teams. And for the smaller guys, it will be very costly, like you explained. But the other proposals, if TER changes, are what that consultation paper has indicated. And if that 5 basis points additional charge is no longer, applied, then will that hit profitability? And if yes, by how much? I mean, from the point of view of investors who are investing in mutual fund stocks, I mean, I'm asking from their perspective, what should, what can the outcome be with the current proposed TER structures and this 5 bips?
So the way I understand that 5 bips, obviously it was a temporary phenomenon, the SEBI is explained, which is that it will not make any meaningful difference. The difference will come if you cut down that 15 bip structures and other thing that will affect, I said, smaller names. As far as large AMC and listed AMC space is concerned, I don't think there'll be any impact because they will pass it back. So basically, the net, the distribution, it will impact the distribution circle. So the people who are distributing, or the market intermediaries, MFD sort of people will be impacted much more than AMC because AMC will pass.
Right.
All right.
Before we run out of time, Sandeep, you have a broader view on other asset classes, etc. as well. You track so much. The big debate has been whether, what's happening in the US is set up for more than a garden variety. NASDAQ is already about 7% off the highs. So is this just a technical shakeout which will correct itself and things will be back on track? Or what's your sense? And how does it affect us, if at all?
See, in fact, I will say in last many quarters, India is actually becoming a low beta market, okay? And we have a negative correlation with the global markets, not the historical, but I'm talking about last many quarters, we have seen this phenomena. So with that background, if the global market corrects, India will be beneficiary in terms of money flow, okay? But so it will be always be a psychological impact. In fact, we have seen recent few days or last 1 month where US and developed market corrected, emerging market also corrected. We have not been impacted. It's just the opening is slightly weak and then we recover. See, we have to also understand India has underperformed for last many quarters. So with that background, we should be constructive. As far US is concerned, for last many months, I've been highlighting the risk is not in India. It's the global market, particularly US, where complacency was on a higher side and hence this correction you are seeing. But if you really ask me, this is a bubble, and then answer is big no. When everybody believes this is a bubble, and I don't think anybody really able to identify 2008 bubble was good. So if from that perspective, my only point, and somebody is even identified to say that this guy has identified previous one bubble, so he's the his track record is great. So I think just one cycle or two cycle you catch it and then you try to conclude because somebody has got it and somebody is making a statement. As a behavior analyst doesn't gel well very much with that thesis. And I always say when it actually peaks out, that's a time when people will not believe it. People say, oh, we heard this phenomenon in 2025 also. So let's go and participate. That's the time the real problem starts. So I think this could be a small trailer. Maybe the ugly picture is which is pending much later.
You know, Sandeep, it's the individual investors who are raising this bubble noise, etc. The mainstream, global research banks, etc. They're all very clearly saying that no, it is not.
If you ask me, they never do it. Even 2008, none of the bankers.
That is why I'm asking the question. If they were all saying yes, it is, then that is the question. Because actually, the consensus is not that it is a bubble. Consensus is it's not a bubble, and hence the question. But I take your point that you can't bet on not one-hit wonders, but just because someone got a call right, you can't kind of sort of say that they'll get everything right. We have enough of those experiences.
If you say small hype, answer is yes. Okay. But if you say it's a real bubble, because it is backed by earnings, it's backed by numbers. It's not like the P just expanded. In fact, I will say if there is a bubble as compared to US, Indian new age companies have much far bigger bubble. If I go by this definition, then Indian companies have far bigger bubble than the US because US companies still show numbers. Okay, so valuation-wise, they're still attractive as compared to Indian new age companies. So bubble is actually here, not in the US.
Any of the newly listed companies did you all get in? Any of the newly?
No, we very rarely subscribe these names because it doesn't fit into our thesis of. See, Nigel, if you recollect, we have been taught, we used to give 2-3 times sales multiple only to the branded companies, and that's the way we learned. From market cap to sales perspective, or if not market cap to sales perspective, it's largely few brands used to get 3 times, 4 times, 7 times only in the pharmaceutical space as a FMCG. Now none of the companies make money and we want to give multiple of 10 times sales, 20 times sales, okay? Because earnings will not be visible. So we have been taught about cash flow, but nobody looks into it. So that's the way the phase comes. Majority of the even smart people get carried away. And that is the phase which we are going through. You have to live with that.
Because, Sandeep started by saying that he's looking at the unloved parts of the market and these new listings are getting a lot of love. They're getting 10 times sales love, 11 times sales love. So too much love is happening over there. But take your caution on board. Sandeep, great conversation as always. Thank you so much for joining in. And you have a good rest of the day as well. Okay, quick check on the market before we move on. And the green is sustaining on the screen, 26,100 precisely, exactly on the Nifty. For the time being, the Bank Nifty is a little sluggish. It's absolutely flat with a slight red bias. The Nifty is okay for the time being. Okay, a couple of interesting stocks to take note of. NBCC, which announced a big order win. There's some news on Cummins as well. Vinny's here with more. Vinny.
Hi, good morning. So first I'll start with Cummins. There's a brokerage note that's coming from Citi. They've given a target price of 4,875 buy rating. Now, they mainly met with the management of Cummins. So key highlights that came in over there. They said Cummins India, they're expecting steady demand, especially for the power generator side, as well as from real estate, construction, as well as infrastructure side of the sector. They're seeing good demand there. In terms of data center demand, they said providers are seeing steady demand there with lumpy hyperscale demand. So that is one thing that one will watch out for. Industrial segments, weakness in Q2 is what we saw, and that we had spoken about it, and that is transitory. That will start seeing an improvement going forward. They see potential in the railway, defense, as well as marine side in terms of improvement for the infrastructure, industrial side of the segment. And that is why they're maintaining the buy rating. Target price is at 4,875. Now, the other one is NBCC. Good big order win coming in for the company, 2,966 crores. This order is from Nagpur Metropolitan Region of Development Authority. This is for a project management consultancy order. And obviously, this is a very big order win for the company. So it turns out to be positive because the order book continues to be healthy, as well as future revenue visibility improves, and that is why NBCC also is seeing a positive move.
Okay, all right, got that, Vinny. Thanks very much. Let's now shift gears and actually move to the auto space. Growth seems to be holding up well post the festive season. At least that's what the latest Vahan data is indicating. Let's try and understand this better. We have with us Saharsh Damani, CEO of FADA, and also Shailendra Luthra, Director of Bright Group. Gentlemen, thank you so much for being with us. So we were just looking at the trends, right? And Vahan put out the latest data. This is 1 week after the festive season versus 1 week after the festive season last year. So calendar, the dates don't match, but it is like to like in that sense. And it seems, if I go with those numbers, that on the passenger vehicle side, the growth is 14%, and the two-wheeler side, the growth is 29%. So that's the real question, gentlemen. This burst of festive, GST cuts, all of that excitement, was that just a festive season phenomena? Or do you think demand is going to stay strong for the next couple of months ahead as well? Mr. Luthra?
Well, the market sentiment is quite positive. And at the dealer side, the dealers are seeing a surge in the demand. The customers are lining up. There's a good order book which is in hand. And as far as you quoted Vahan data, there is an upsurge in Vahan data also. These are the registrations post the festive seasons. So from my perspective, from the outlook that I see, I don't see the demand going down. There's a robust demand, and which will continue, and it will be sustained demand with the new affordability and thanks to the GST cuts.
Okay, let's actually bring in Mr. Damani and get the FADA view in as well. What are you hearing from dealerships, from the entire network? Is it as strong as what we saw around Diwali? Because the big fear in the market is that this will taper off. You know, it may not extend into the remainder of this year and next fiscal year.
Yeah, so good morning and thank you for having me on your show. But before diving into your question, I just wanted to acknowledge an important milestone, and it has now been 7 years since FADA began publishing the Vahan-based retail data. What started with a fair bit of skepticism has today become the industry's most trusted lens to assess real demand. Coming to your question, I think what we are hearing from all across the country right now is demand is robust. And it is not only a festival phenomenon, but this month, the month of November, you're seeing a lot of marriage days coming in. So that's keeping the demand healthy. Going forward in the month of December also, since it is the year end and the calendar year change, we will witness great schemes coming in from all the OEMs across the board. And that will again, once again, pull market in the green. So till December, demand is good. What we need to understand is there are customers available at the right price point. So we need to see that beginning the new calendar year, OEMs continue to attract the customers with excellent schemes, the way the schemes are running right now in the market. If those continue, demand will continue to remain robust till FY end.
So Saharsh, I know it's a bit of a tough question, but some sense, say if we talk about October, November, December, you know, this last quarter of the current calendar year, what is the growth that you would expect? And I'm talking about, you know, end level retail growth, those registration numbers, which that 1 week that was reported is looking very, very strong. But as we normalize O&D, how much growth for two-wheelers and how much growth for four-wheelers would you expect?
So if I give you an historic data, from April to October, we have seen two-wheelers growing at the rate of 12.5%, and passenger vehicles again growing at upwards of 5.5%. At the beginning of financial year, we had estimated that the passenger vehicle growth will be in low single digit. But because of the GST 2.0, which has come into picture and come into play, the run rate has gone up. And for this October, November, December quarter, I think the run rate will be above the average of 4.5%, what we had seen until September this month. So that's what we are looking in at in the passenger vehicle segment. In the two-wheeler space, the growth should be in high single digit. That is what we are expecting.
Okay, but that's not saying much, right? Saharsh, you're saying that it should be above the 4% run rate. That it has to be, that we know with the demand thrust. Okay, let me ask you a broader question. You started the year saying on the passenger vehicle side, growth should be around, 4%, right? Yeah. Now what are you expecting? Double-digit growth for passenger vehicles this year, fiscal year?
No, we don't expect double-digit growth, but we definitely expect growth to be above 5.5% mark, maybe somewhere around the 6% mark. So that is what we are expecting. And this growth has been upwards because at the beginning of FY, we had estimated around 2 to 3% growth. So if 5.5 to 6% growth comes, this will be double of what we had expected. So I think this will be a good number to close the year with.
And what about passenger vehicles? That's helpful. So what you're saying, from an expectation of 4% growth in passenger vehicles, you're now hoping the year will end with at least 6.5% growth. Similarly, for passenger vehicles, if you can you give us some sense?
So this was for passenger vehicles.
For two-wheelers, I beg your pardon. Two-wheelers, yeah.
Yeah. So for two-wheelers, we expect that 9 to 10% growth should be easily achievable by the end of FY.
Okay, all right. Hi, gentlemen. Good morning. Good to see you all in. Mr. Luthra, there's a bit of a split verdict with regard to the tweak in the emission norms based on the weight of a vehicle. What is your view on that?
Well, on the emission norms, the government is changing certain policies and certain decisions, but the manufacturers would be supporting that. The OEMs would be supporting that and ensuring that the customer sentiment doesn't get hampered with it. And on the society perspective point of view, we should be having some more stricter norms considering the environment we live in. But let me also tell this to you, India is a torchbearer as far as emission norms are concerned. We are way ahead many other countries of the developed world. And I'm sure both the consumers and the OEMs would be lapping it up easily. We have geared up to come to that level.
But this change, not change actually, it's this hike in the price of re-registering your vehicle, basically getting that fitness certificate again. That increase, do you expect it to spur demand a little more? And is that only at the entry-level segments? I'm guessing in the premium segments, these things don't really matter anyway. But Mr. Luthra, would you expect this to add to it?
You are talking about the re-registration of the vehicle after the end of life.
Yes, yes. Those charges are going up, right?
Yes, that is going up. But after the end of life, there would be not a big percentage of people who would be going in for re-registration, because the overall aspiration and the demand to change is very high. And it is also possible that in the coming future, this is my appeal from your medium to the government, we might see some good incentives for scrapping of the cars and buying new cars for the recycling. So overall, I don't think it will have a significant impact that many people would be going in for re-registration. But yes, it would act as a deterrent for sure.
Just, gentlemen, one quick question. We haven't discussed EVs. Now, in this new era of lower GST, the whole ICE versus EV debate, Saharsh, if you could come in on this as well, because it seems the growth in EV sales is not as high as what the OEMs would have liked. What are you seeing on ground? What is the and what are the estimates between ICE and EV looking at the next couple of months?
Yeah, so just to give you a perspective, two-wheelers right now in the EV space, they have around 8 to 9% market share. And in the passenger vehicle market share, the EV contribution is around 5%. Barring the month of October, we have been seeing slow growth coming in both these categories. And the growth is largely coming because more established players are now coming into the market in the two-wheeler space, especially with the likes of Hero, Bajaj, and TVS. Also in the car segment, if you see, more and more products are getting lined up in the EV space and also in the alternative fuel space. So as customers get more choices, I'm sure these numbers will go up. But if I were to talk about, say, next six months to 9 months period, two-wheeler should see EV penetration of at least 15%, and electric vehicles in the passenger vehicle segment should see again 8 to 9% growth.
Okay, all right. So perhaps the EV penetration will pick up in the months ahead. Thank you very much, gentlemen, for joining in and giving us some perspective on how the Auto sector is shaping up after a bumper festive season. So trends looking good. And FADA saying that for the passenger vehicle space for the year as a whole, they now think that growth should be in the vicinity of 6 to 6.5%. Let's take a quick break on that note. We'll come back on the other side and we'll get chatting with Neha Agarwal of JM Financial Institutional Securities.
Welcome back. This is Corporate Radar, and the markets continue to hold in the green as we speak, marginally 30-40 points or thereabouts. But as promised, we have Neha Agarwal, the MD and Head of Equity Capital Markets, JM Financial Institutional Securities, who joins us on the show. Hi, Neha. Good morning. Good to see you again. Well, let's address the point with regard to the fundraisers that we've seen this year. It's been very, very strong. My query to you is, do you expect this sort of a momentum to continue? If you could, break it up in terms of a number as well. And also the worry is, India is turning out to be the IPO factory. Are you worried about the quality of paper that's hitting the market?
Am I audible?
Yes.
Thank you for the question. I'm actually not worried. I'm very enthused with what's happening. You're actually seeing a confluence of entrepreneurial energy with investor appetite. It's really not an array of indiscriminate issuances which are happening. I think investors are evolving to proper filtration of data, strong management equivalence of corporate governance. They're believing in business models. And wherever we're seeing that there's even an iota of doubt on how the business will evolve, markets push back. So I think that filtration is becoming extremely key for the success of markets. Let me give you a few data stats, right? Calendar year 24, we saw close to 1.5 lakh crores of equity issuances on the main board. Continuing the trend, calendar year 25, with another 6 weeks to go, I think that we will probably beat the last year's high. As we speak, there are more than 200 documents filed with the regulator. If I really had to put some bit of probability, some bit of filtration, with many more transactions to file, I wouldn't be surprised if the next 12 months, we see 2.5 lakh to 3 lakh crores of equity raise with a lot of filtrations in the way the investors are valuing it. So I think it's a great time for Indian primary markets.
This is a spirited defense, Neha. Not that it needed to be defended, but point well taken. Morning, Prashant here. I spoke with Vishal yesterday, and he said, well, the pipeline is going to be a bumper into 26. Of course, all of it depends on markets and what secondary markets hold up like, and that no one knows. So if the demand goes down, supply, I guess, will recalibrate accordingly. But I mean, with NSE lined up and others lined up, I guess the numbers will be much larger. Which sectors, Neha, if you can give us a sense, are you seeing the maximum activity in? You're expected to see maximum activity in as we look into 26.
No, I think what is really different from raises, what we've seen the last 5-7 years, is this time it's all around. We're seeing sectors from new age tech, investors really giving credibility to large business models. We're seeing in renewable energy a lot of interest. We're seeing manufacturing take a large part of the mind share of the investors. If you see precision, R&D involvement in manufacturing, autocoms, I think we're a great bull over there as a house. We believe anything which involves the precision element into it, investors are lapping it up. They're expecting a large deluge of fundraise, in fact, in these three subsectors. I'm actually not a fan to see hot sectors, only some subsectors get capital. I think it's well bound this point of time. I think that's great for Indian markets.
So in a way, manufacturing, right, Neha? You think we'll see a much larger share of manufacturing businesses come into the market in 26?
In all our conversations, we're definitely seeing that mirror through primary markets. I think a lot of the growth capital is going to get infused via IPOs in probably the next 12 to 15 months to come. But I must caveat that this is to do a lot with, it's not commoditized manufacturing. It's, like I mentioned, it's a lot to do which is R&D backed, this technology. You're seeing the essence of precision come into manufacturing. And I think that itself will be spearheading a lot of our growth.
Neha, just one more question, just playing the devil's advocate here. You know, I spoke with Sanjeev Prasad of Kotak yesterday on the sidelines of a forum, and he gave a statistic. He said over the last 5 years, there's about $100 billion worth of money which has been raised through IPOs. Only 15% of it, according to him, has gone into building assets, plant and machinery. You know, bulk of, everything else is basically exits. So it's a slightly broader question. It's about the so-called smart folk are selling, which is early investors, promoters, and it's, of course, en masse being bought by retail because foreigners aren't really there at this point. So just wanted you to address that. I mean, the number, that statistic was pretty stark.
No, I think the data point is correct, but I would put it in a very different perspective, right? So of the $100 billion, it's about $20 billion, which is primary infusion, and primary infusion has been to delever our balance sheets largely, or primary capex. But let's not forget, in the 80 billion, a large percentage of it is private equity monetizations. Now, how do the capital of PEs really come in, right? In the last 10 years, we've seen close to $400 billion of private equity raised for corporate India. They've incubated businesses. They've helped entrepreneurs grow. And after the company has reached a particular maturity in operational metric, they've gone and monetized their stake sale, which gives a huge vote of confidence to the boardrooms of those private equity investors sitting globally for them to infuse more money and incubate new businesses. So I actually think private equity monetizations is a great thing for Indian markets. Yeah. So yes, they've not gone to delever balance sheets, but they've gone to help businesses evolve.
Absolutely, and that's an argument that we've heard from some of the larger private equity giants as well. Exactly that unless they monetize, how will they fund the next wave of ventures? But Neha, that's the morality argument that Prashant raised with you. I have the money question now, which is probably the most juicy part of this IPO debate, right? The pricing and the valuations that you folk are able to negotiate and get through, and kudos to you. I mean, the investment banking community, because you're able to secure whether they're exits, whether it's fresh money for the company. Now, that valuation, conversation, I just want to understand what's going on behind the scenes, especially when you're talking about new age businesses, these consumer tech, companies or platform companies. Is the pricing going higher and higher because there is a FOMO in the market? We don't have too much AI, we don't have deep tech, but we have a lot of consumer tech, and everybody wants to be on that train. Is that what is driving the pricing higher? Just walk us through the pricing mechanics.
Like I've always said this multiple times, IPO pricing in India, there's really no math or science to it, right? It's literally an art. It's a judgment. Investors are out there backing ideas, they're backing concepts, they're trusting the management team. I don't think now markets have matured. I don't hear investors telling me, let's look at 1 year forward revenues, look at guidances. I think they're graduating to quality. I think what's very, very important to the point of filtration, which I was telling you all earlier, is investors are backing business models. And to my mind, that is extremely refreshing when they're pricing transactions. And these aren't centered by 2 or 3 funds deciding valuation, right? You've gone out there, you've met more than 100 investors globally, domestically. And after consciously having those conversations, they're backing models. And that's how the IPO pricing, the judgment as to and if you see the last 5 to 6 months, the IPO pricing has been very accommodative. I think issuers have respected investor feedback, they've valued it, and thereby you see at least 20-25% return on listing. I think what's important right now, to my mind, is the sustenance of this listing price, which will be backed up only by good corporate earnings in the quarters to come.
Which just reminded me about Lenskart. I'm just checking the price on the screen right now, 420, because every time we have such high-profile issues coming up, that debate rages. So just to complete this point, Neha, for investors who need to understand how the new valuation parameters are working, so say a price to sales, is that here to stay? I mean, what is the learning curve that regular retail investors need to kind of, go up with? Because this is no longer about traditional price to book or traditional price to earnings, right?
No, I agree with you. I think there was inertia even with institutional investors probably a few years back because they were backing new business ideas. The point of validation wasn't proven in the markets. But off late, if you see with all the listed comps, the unit economics is working in their favor. They've delivered to their promises. And I think that itself is confidence building for retail. I'm a better fan of retail investors also plugging in some bit of the capital via mutual funds. Mutual funds, let them do their work. That's what they're meant to do. And those business models are being priced on revenue going forward. However, there is an implied multiple that they're working off on the PE or EV EBITDA for those businesses going forward by the institutional investors. So I think, again, the point of validation is the listed peers have done extremely well, delivered what they had promised to the investors at large. I think that is giving the confidence to the new issuers when it comes to pricing discussions.
Well, it's a pleasure, Neha. We wish you all the best of luck. Thank you very much for joining us. Interesting chat here on CNBC-TV18 from the sidelines, the JM conference, which is underway. Thank you. Okay, well, we'll take a quick commercial break here. We're going to come back in just a bit from now. I think past 10 now. And it's quietened down, 29 points higher, 26,080. There's grow at the bottom of the screen, another 7% cut. So Ruby, I was just looking at, we were talking about NVIDIA. We don't have NVIDIA here, although Deepan said if NVIDIA was listed here, it would command some double valuations and all. No NVIDIA, but we have NetWeb.
Yeah, that's true. The closest we get to NVIDIA.
We should have, I mean, to be fair, they are one of the...
They're a supplier, right?
Yeah, there are less than 10 licensed suppliers of NVIDIA globally. That's a pretty big deal, right? And NetWeb is one of them. And the stock should come up. It's up about 6%. Of course, it fell 1,000 rupees quickly from the highs. So there is that element of this as well, the lift that it is getting now. But it's interesting. If you can have NetWeb up, please. There you go. That's a stock, about 200 rupees higher, back to close to about 3,500 rupees. We'll take a quick commercial break here. We're going to come back, Vinay Rajani of HDFC Securities, for technical trading ideas. Stay tuned, coming up. Okay, welcome back. 40 points higher, 26,100, just under that level, by the way, holding on at this stage. Vinay Rajani is with us, Senior Technical and Derivative Analyst at HDFC Securities. Vinay, good to have you with us here. Good morning. On the indices, any trades, Nifty Bank and specific stocks?
Yeah, good morning. So Nifty has crossed the 26,100 in the morning, definitely because of the positive global cues. But somehow the cash market stocks are not moving that much with that much momentum. So though the trend has been good, but the trend is good for the large caps only, the F&O stocks only, and sector rotation is going on. So we need to be vigilant about selecting the sector and stocks. So yes, IT has been supporting capital markets, defense have also been into a positive trend. So selectively we are bullish, and Nifty is definitely into an uptrend, and we should not take trade against the trend. The yesterday's low, which was around 25,850, should be the stop loss in trading long position, and ultimately Nifty can take out the previous all-time high, which was placed around 26 to 77. So yes, overall trend is positive, though the choppiness is there, but keeping a stop loss at 25,850, one can remain long with a target of 26,300. And right now, the capital market and defense space has been showing strength. IT is the another sector which one can look for the trading. Cash market stocks one should avoid because momentum is clearly missing there. So yes, overall stock-specific markets are good. Banking have been performing well, but since IT has taken the lead since yesterday, banking stocks can consolidate a bit for a time being. But overall, markets are looking good, and 25,850 should be the stop loss in trading long positions.
Okay, Vinay, so what are the specific stock trades for today then?
Yeah, so as I said, the capital market theme today has been doing very well. So MCX is one of the stock which we like on the charts, and it is making all-time highs day by day and looking strong. So MCX is into a clear-cut momentum, bullish momentum. So 9930, 9950 should be the entry price. 9770 should be the stop loss. On the upside, we are targeting a level of 10,250. So So this is a trading target for MCX. The second stock I would take from the defense space. This is another space which is doing well since morning and overall into an uptrend. So Bharat Electronics is looking good. 425 should be the entry price. Stop loss should be kept at 418. On the upside, I'm expecting a target of 435.
Okay, all right. Thank you very much, Vinay, for the trades and for the technical advice on the index as well. The index is still up about 50 odd points. Let's go back and revisit Sammaan Capital. Stock has been a little volatile. It's still down about 0.5%. Gaurav, fill us in on the latest and what the company has said about the whole court order yesterday.
Well, yes, when we look at Sammaan Capital, yesterday was a disaster, but now company has come up with a clarification. So before I go to what happened yesterday, let me tell you a background story. In 2019, a PIL was filed against Sammaan Capital and the promoter. In 2024, Delhi High Court actually rejected the PIL, saying that the proceedings that they had filed and appeals that they had made were not right. Apart from that, company also said that the PIL, which was specifically filed for the 5 specific accounts, they have recovered most of the money in 2019 and there is no account receivable from these accounts as of now. Now, what happened yesterday? In October 2024, there was an appeal made in front of the Supreme Court against Delhi High Court's judgment that was given. And based on that, what company now says is that there are no open investigations specifically pertaining to the allegations which were made in PIL earlier against Sammaan Capital, neither from the investigative agencies or from the regulatory bodies like RBI. Apart from that, they also said that the court did not find any wrongdoings against Sammaan Capital in this case. And lastly, the Honorable Supreme Court also said that we have not expressed any opinion against Sammaan Capital. So this is important to note. Apart from that, the current proceedings which are ongoing are for the petitioner's submission for the earlier promoter, Mr. Gehlot, and who has fled the country and now has settled in London. Apart from that, Mr. Gehlot is not a part of the company right now. And when we look at the IHC deal, now company also says that both IHC and Sammaan Capital continue to remain focused on making this deal happen and make IHC as a promoter of the company. So definitely, company has shown confidence that the business ongoing is sound. And apart from that, there are no concerns raised by the Supreme Court. And on back of that, we will definitely watch out on this stock today.
Okay, all right, Gaurav, thanks very much for that. Stock's actually absolutely flat, unchanged from where it was yesterday. So a sharp slide at open and then it's picked up from there. You know, Hero MotoCorp has crossed 6,000 for the first time since September 2024. I think we've had 2 upgrades in the last 2 days. Yesterday, I think there was an upgrade I think from JP Morgan, I think. And then I think there's one today as well, this morning as well. So more on that a little later. We'll take a break. We are back, Lata, in conversation with HSBC's Pranjul Bhandari on It's the Economy segment coming up in just a bit.